Welcome to Master SIE Exam Vocabulary. Key financial terms explained. This presentation is designed as an educational resource only to help you understand the financial terminology commonly tested on the Securities Industry Essentials exam. Important disclaimer: the content you're about to see is for educational purposes only. This is not financial advice, investment advice, or exam preparation advice. It's simply a glossary to help you understand key concepts and definitions. Whether you're studying for the SIE exam or just want to build your financial literacy, this guide will walk you through essential terms in clear, straightforward language. Let's get started. A 401k is an employer-sponsored retirement savings plan that allows employees to contribute pre-tax income into investment accounts. Employers may also match a portion of employee contributions. The money grows tax-deferred until retirement. Withdrawals before age 59 and a half may trigger penalties and taxes. A 403b is similar to a 401k but is designed for employees of public schools, nonprofits, and religious organizations. Contributions are typically made pre-tax, lowering current taxable income. Investments often include annuities or mutual funds. Earnings grow tax-deferred until withdrawal. This FINRA guideline suggests broker-dealers generally should not charge more than a 5% markup or commission on securities trades. It is not a strict rule, but a fairness benchmark. The appropriate markup depends on factors like market conditions and transaction size. Excessive markups may be considered unethical or abusive. An ABLE account is a tax-advantaged savings account for individuals with qualifying disabilities. Contributions are made with after-tax dollars. Earnings grow tax-free if used for qualified disability expenses. It allows beneficiaries to save without jeopardizing certain government benefits. Account statements summarize an investor's holdings and transactions over a specific period. They show account balances, market values, and activities such as trades or dividends. Statements help investors monitor performance and verify accuracy. Firms typically issue them monthly or quarterly. An accredited investor meets income or net worth thresholds defined by securities regulations. This status allows access to private placements and certain alternative investments. The purpose is to ensure investors can handle higher risk. Income and asset standards are set by federal law. Accrued interest is the interest earned on a bond since its last coupon payment. When a bond is sold between payment dates, the buyer pays the seller this accumulated interest. This ensures the seller receives compensation for holding the bond. The buyer then receives the full coupon at the next payment date. This type of preferred stock pays dividends that adjust based on prevailing interest rates. The dividend rate is typically tied to a benchmark rate. This structure helps reduce interest rate risk. Investors benefit when rates rise. This contract outlines the responsibilities of underwriting firms participating in a securities offering. It details how shares are allocated and how risk is shared. The managing underwriter coordinates the group. It ensures orderly distribution of newly issued securities. This document defines the rights and duties of general and limited partners. General partners manage the business and assume liability. Limited partners invest capital but have limited liability. The agreement governs profit distribution and decision-making. ADRs allow U.S. investors to purchase shares of foreign companies in U.S. markets. They are issued by U.S. banks and trade in U.S. dollars. Dividends are paid in dollars as well. ADRs simplify international investing. An annuity is an insurance product designed to provide income, often during retirement. Investors contribute funds either as a lump sum or over time. Payments may begin immediately or at a future date. Some annuities offer fixed returns, while others vary with investments. Annuity units are measurement units used in variable annuities during payout. The number of units remains constant during retirement. Payment amounts fluctuate based on investment performance. This structure shifts market risk to the annuitant. For new securities offerings, AON means the entire issue must be sold or the deal is canceled. For regular trading, an AON order requires the full order to be executed at once. Partial fills are not accepted. This protects investors from incomplete transactions. The ask price is the lowest price at which a seller is willing to sell a security. It represents the supply side of the market. The difference between the ask and bid price is called the spread. Buyers pay the ask price when purchasing immediately. An at-the-close order instructs a trade to be executed at the market's closing price. If it cannot be executed at that price, it is canceled. Investors use it to match portfolio valuations with official closing prices. It is commonly used by institutional investors.